Welcome back to the Denver Radio Real Estate Show. I'm Cheryl Garlock with Colorado Front Range Properties. I am so glad you joined us here today. You know, this is a show all about real estate consumer education and providing you the best of services that we can go ahead and offer you. So we always like to go ahead and keep you well informed as to what's going on in the market and some of the nuances, you might say, with regards to real estate. Chris Zadra with Homebridge Financial Services is my guest today, and we've been already talking a little bit about the effect of interest rates, inflation, and that sort of thing there, so you definitely want to stay tuned with us here as we talk more about that. But if you are thinking about buying a home, and you're not 100% certain of exactly where to go or what to do, go to denverrealty.com, and on the home page there, right below the panoramic picture, you'll be able to find a little ebook that'll help you. It's a buyer's guide called The Home Buying Process: Keys to Your Success. Now, what's important about that is that it'll give you some tips and tricks there about negotiating and what you need to know, things that you need to consider when you're buying a home. And last but not least, it's got an ideal worksheet in there to help you identify what's right for you in terms of housing, what you're looking for there. So go to denverrealty.com, and of course, you know what to do. You got questions, give me a call. 720-373-0654, 720-373-0654, or pop me an email. Just go to denverrealty.com and you'll find it right there. Now, Chris, I want to go ahead and talk a little bit more back about the effect of the rising interest rates. You know, we always tell people that now is a good time to buy. I don't really think a lot of people really understand exactly, well, why now, why not tomorrow? Well, I just talked about inflation.
Right.
And the fact that Denver's home prices have gone up, you know, at least 34% over the, the last year or so. And that's significant, you know, that's not what it's going up on average. And you can't keep up with that. And that's what the feds will do to control that inflation. That's really not good for us in the long run.
Right. And you know that, the feds have basically been printing money for all intentions over the last several years, and so we know inflation's coming. It's just a matter of when and how much.
Yeah, exactly. Now I want to go back to, because you were sharing with me some statistics there, and some of the I think you call it a DOTS program, basically how the Board of Governors has actually voted when they've met on to hold interest rates down or how many points to move it up.
Correct.
And right now, they're loaning money. I know you guys maybe don't know this at all, but they're loaning money out to the banks at what, 0?
Basically, yeah. I mean, the Fed funds rate doesn't affect us, technically as consumers, because it's basically what the overnight lending rate is for bank to bank. But the Fed
but
funds,
it does affect us, though, because
affect us. Yes,
it does, because the rates that are offered to consumers are based on that Fed funds rates and then some.
So prime rate is probably the rate most people understand. Prime is based on what the Fed funds rate is. As that traditionally, when the Fed raises or lowers rates, that it directly correlates to the prime rate. And again, prime rate's not specifically tied to what you're going to get on a 30-year mortgage.
No.
It is on a second. Prime rate's typically a direct tie to a second mortgage. But the bond market kind of all the bonds, whether it's a mortgage bond or any other type of bond, follows that direct to some degree. So if the Fed funds rates goes up, let's say 1%. There's a reasonable chance we're going to see interest rates go up somewhere in that same range,
right?
During that period of time, because it costs the banks more to, borrow the money that they need to survive, if you will.
So I want you to be thinking about this, because this is really what we were talking about here. You showed me the chart and the graph there, where the Board of Governors was suggesting, how far up the, for the next, 4 or 5 years,
correct,
the path, the direction for the interest rates, and we have been at an uncanny low. I've been doing this for 34 years. I can tell you, this is the last few years of the interest rates that we've had. This is not real. It's just seductive. It's not real.
And there's a couple things I wanted to share with people on this. First off, one of the statistics I saw, and this is not exact, but it just kind of shows you what kind of the mentality is there was a statistic probably 6 months ago or so that they looked at 2,000 folks that were buying a home, and they asked them what they thought normal interest rates were, and 85 to 90% of them, somewhere in that neck of the woods, thought that rates below 5% was normal, which just blew my mind, because I ran some numbers here before we got together to kind of share with people. So if we go back and we look at they track rates monthly on average. I found them all the way back to 1971.
Yeah.
The average interest rate, if you take from August of this year to January of 71 is 8.5%.
8.5%. I've been in this business, like I said, 34 years, and so hey, I got to tell you,
crazy.
this is not news to me.
And here's the thing that I also want to throw out there, because to me, I think there's definitely some skews to that.
Mm-hmm.
You look at basically 2007, 2008 is when we saw rates start to make their real big drop to where we are today, and then if you go back into about 1990, 1989 and back when Jimmy Carter was in office and we had some major inflation issues, those are kind of two areas that I think are very skewed, both on the low end and the high end. So if you take that out, which I to kind of get a truer average in my opinion, the average is still about 7.5.
Wow.
And so when you look at today's rates being in the roughly the mid fours, that's a big deal. And where I wanted to kind of head with this is, if you look at let's say $250,000 loan amount roughly. Okay?
Right.
And you see a 1% change in rates. Here's the effect that happens to the consumer. You see a $153 payment change. So, as an example, if today's rates are 4.5 and they jump up to 5.5, you're paying $153 more for the exact same
house
loan, whatever.
Right, exactly.
Okay, so here's where I kind of take that to the next level to make more sense to people is, if I'm a consumer that can only qualify for a certain payment, so again, just generic numbers on a $250,000 house at 4.5, you're looking at principal and interest of about $1,266. Okay, so if that's the maximum I can qualify for, I don't make enough income to go higher. Basically, an interest rate increase of 1% now pulls me down to $223,000. So it knocks off $27,000.
It lowers your purchasing power, which
Yep.
when you have a rising market home prices, wow, you're
Yep.
really in not good shape there. So
Take it a step further.
Yeah.
Okay. You just talked about what the market appreciated, and let's that's kind of a higher number than what we traditionally see on average.
Yeah, absolutely.
I think 8% is kind of what we traditionally see, but let's just even be conservative and say 5%. If we look at that same exact scenario now, all of a sudden that's about $11,000.
Yeah.
Now all of a sudden the same house a year from now, if rates went up 1% and you waited a year, you're looking at buying the same house effectively for $212,000. So you've effectively just pulled $40,000 worth of qualification on purchase price out of just by waiting.
It hurts you big time. We're going to talk more about this as our show continues here, but let me remind you of an announcement that we're making here about we're moving our show to a podcast format. It's going to allow us to zero in on the questions and talk more specifically about subjects like this, and Chris is going to do that with me here in the not too distant future here. So go to denverrealty.com. Be sure to keep check of us there and watch for our shows right there. We'll be right back with more from the Denver Radio Real Estate Show.